Tariffs and gold. Sounds like an odd pairing, right? But when governments start slapping tariffs on imports and exports, gold prices tend to move. Trade tensions create uncertainty, and when uncertainty spikes, so does the demand for gold. But why? What's the connection between tariffs and gold? And more importantly, what does it mean for your money? Today I'm breaking it all down, and by the end, if you're still wondering how you could help keep your savings protected, I'm going to talk about a little known option that's been helping people for generations. Tariffs are essentially taxes on imported goods, and while they might seem like something that only affects big corporations and global trade, they can potentially send shockwaves through the entire economy. When tariffs go up, prices on everyday goods often rise. Businesses adjust their strategies and markets react. And here's where gold comes in. Historically, whenever tariffs have been introduced or increased, gold demand has surged. Why? Because tariffs create uncertainty about inflation, the stock market, and economic stability in general. And gold has long been considered a safe haven asset, something people turn to when they don't trust the stability of the financial system. But it's not just individual buyers reacting. Central banks around the world have been increasing their gold reserves in response to shifting trade policies. When even the institutions that control money supply are turning to gold, well, it's worth paying attention. One of the biggest concerns with tariffs is inflation. When imported goods become more expensive due to tariffs, businesses can either absorb the cost or pass it on to consumers. More often than not, prices rise. And when inflation starts creeping up, gold demand follows. Why? Because historically, gold has held its value even when paper currencies lose purchasing power. That's why in times of high inflation or economic instability, gold prices tend to rise. Tariffs can be a major inflation driver, and if inflation becomes a long-term issue, we can expect gold to remain a sought-after asset. Markets don't normally like uncertainty, and when tariffs are in play, they can introduce a level of unpredictability that can rattle stock markets, disrupt supply chains, and make traditional assets more volatile. While stocks may take a hit during trade wars, gold has historically remained strong in times of global economic uncertainty. That's because gold isn't directly tied to any government's monetary policy or trade strategy. Whether tariffs increase or decrease, gold remains a globally recognized store of value. Now let's flip the script. What happens if tariffs are lifted or renegotiated? Some analysts believe that if trade tensions ease, gold prices might stabilize or even dip in the short term. But here's the thing, tariffs are just one factor among many driving gold demand. Even if tariffs disappear, other long-term factors like inflation, interest rates, and global economic uncertainty will still play a role. And historically, gold has continued to be a reliable asset regardless of trade policy shifts. Gold's role in the global economy has lasted for centuries, long before modern tariffs even existed. Whether it's trade disputes, inflation concerns, or financial crises, gold has repeatedly proven its value as an asset people turn to when uncertainty rises. And that's why no matter what happens with tariffs, gold remains a key part of financial discussions. Because when governments change trade policies, it's hard to predict how the markets will react. But history shows that when economic uncertainty rises, gold is usually in demand. Now, if you're wondering how you can use gold to help protect your savings, here's something worth knowing. Goldco is offering a free gold and silver kit to help people understand how they can help safeguard their money outside of the banking system. And here's the kicker. You could even qualify for up to a 10% instant match in bonus silver and a free Ronald Reagan half-ounce silver coin. This deal is first come, first served, so if you want to learn more, click the link in the description. Tariffs are just one piece of the puzzle when it comes to gold prices, but history has shown that when tariffs rise, uncertainty can sometimes follow, and that's when gold demand spikes. Even if trade policies change over time, gold remains one of the most consistently sought after assets during times of economic stress. So whether tariffs go up, down, or disappear entirely, gold's role as a hedge against uncertainty isn't going anywhere. Stay informed, stay prepared, and keep an eye on what's happening with global trade, because if history has taught us anything, it's that when things get messy, gold is the one thing that doesn't flake out.